Welcome back to the Mountain Morning Show here on PCTV. Talking now with the folks from the Lee Hartley Lifestyle Real Estate Team. I've got Jim Lee, Deb Hartley, and Rob Lea joining me, guys. Thanks very much for coming in for the regular real estate update here for the Mountain Morning Show.
Hi, Ryan.
Thanks for having us.
Good to be here, Ryan.
Yeah, we're glad to have you. You guys look really great with the your color coordination.
All right.
It was
with the
not
changes to our set.
We clean up well.
I agree. So this morning, you guys are kind of ganging up on me. The last time you guys were on, it was just Jim and me, and I did not feel intimidated. I feel a little bit intimidated right now, but we've got some stuff to talk about, so it'll be a little bit easier on me. First, generally, do you want to just say something generally about the real estate market and in your view that we've had in the last couple of months?
Well, I would say generally speaking, we're seeing some trends in our market, and we'll go over them individually.
Great.
Prices certainly have changed, but so has the inventory as well. So we can hit those point by point.
Well, sure. Let's talk first about distressed sales. This is when, first describe distressed sales and then talk about how they do or don't impact.
So a distressed sale
market.
typically would mean a foreclosure or a short sale. And back when the market fell, Park City realized as many as 35% of homes in the Summit County area were in some sort of distress. Notice of defaults, short sales, even into foreclosure period.
So when you describe a distressed sale, it's when a house is actually on the market, not just when a home is underwater.
It's might not even be on the market. It just might be flat underwater.
Okay, so that would describe homes not active.
Exactly. But 35% of our sales were distressed.
Oh, I see.
Now it's down below 2%.
Wow.
So the distressed sales don't really impact our market anymore. So when people ask, how about a foreclosure or a short sale? There's no inventory.
Do folks come to you guys sort of seeking that kind of a transaction?
That's what
yeah.
used to happen.
Yes.
Don't see it as much anymore because I think people realize that, but there's also an education process that usually those sales are a lot more difficult to get through. It takes months for bank approval, all those kind of things. So,
Not to mention there might be some different emotions involved with folks that are trying to sell a property that needs help.
absolutely.
Well, there's huge emotion involved, and what they typically try to do is, if they can, is they either renegotiate with a bank to get a loan modification, or maybe they even get family members involved to pay those back loan payments and take it out of that distressed sale mode.
Oh, right, sure. So regarding distressed sales impacting prices, now that the distressed sales are not a factor, does that mean that prices are skyrocketing?
Well, Rob, you want to take that?
I wouldn't say skyrocketing. There's definitely markets of our segment that are doing very well. And it really is depending on the neighborhoods and particular developments you're looking at. There's some areas of our market that are doing better, some of the entry level. A lot of that stuff flies off the shelves. That doesn't mean that the prices are skyrocketing. It means that the good inventory that's priced right sells quickly because there is demand out there. There's buyers out there, so if you price it correctly, it's going to sell.
And have people been sitting on the sidelines sort of waiting for this kind of condition to occur before going to sell?
I think they're jumping in more. I think they're a little more active, particularly as I would say the entry-level homes are selling so quickly. I think they're engaging sooner. Things that are priced a little higher, like in Lower Deer Valley, I think there's probably 2 or 3 years worth of absorption, worth of inventory on the market.
So what do you think that's going to mean for the coming future? We're going to see the changes yet in inventory and prices on a trend here for the next 2 years?
It's all neighborhood driven. So I would think in Lower Deer Valley, I would like to see some of those prices start to reduce to get some buyers in the market and get some of that inventory washed away, because some of those things have been on the market a year.
So regarding houses being on the market a long time, talk to me about the relative changes to the inventory or the quantity of homes available right now.
There have been fewer homes on the market over the past 2 years, I'd say, and it's been noticeable in our market that buyers haven't had as many to choose from. So, and as we're trying to indicate, the good stuff, meaning something comes on the market that's priced well, is going quickly, but the product that comes on the market that the seller says, well, I'll wait until I get my price, rather than going to the current price, is sitting on the market. So that's how we accumulate those homes that have been on the market for a year.
Is there an impact of the new developments that are going on with the pre-owned inventory?
Well, the pre-owned inventory, I think, Ryan, what we're seeing is a lot of that inventory, in a lot of respects, is either dated or tired or has some functional obsolescence to it. When that happens, and it's priced in today's, or what people think it's worth, there's buyer pushback.
Sure.
If they don't want to go and buy a $1.2 million home and have to put $500,000 into it to bring it up to current standards, then they are out of the market. So I think we're starting to see a little buyer pushback.
So well now we're with buyer pushback that might come from difficulty in borrowing. Since 2008, obviously, getting a mortgage has been a lot more difficult. What are the sort of conditions now of the ability for folks to borrow?
I would say it's still a process. You're still, going to have to provide a lender with a lot of information. That being said, you can get a loan. Loans are available these days, and especially for some of the inventory that, let's say, the entry-level homes, it's just a good idea to start that process very early on and get your pre-approvals going, so that when a home comes on the market that's priced correctly and fits your needs, you're ready to go.
And are borrowing rates in a good shape here? Are we the time to jump in?
They are still below 5%. So yes, on a 30-year fix, they're still below 5%. So loans are really, really attractive right now. I will say, button up for the process, because they want documentation. But there are still loans at 10% down, 3% down.
Oh, wow.
There's some still good packages out there. So don't let getting a loan shy a buyer away.
And I remember from the time when I bought my first home, it was early in the 2000s. We kind of did a hybrid combination of different loans, and you just mentioned a 30-year fixed. Are people sort of going back to that traditional single loan to mortgage a house?
I would say it depends on what their needs are. If they're going to be in it short term, if you get a 7-year loan, the rates are much less. And
Sure.
if you think you're only going to be in the home for 2 or 3 years, geez, get the best rate you can.
I've seen more and more of my buyers are doing ARMs right now, and that's because they see themselves getting into the market, but they know they're only going to be in that home for 4 to 6 years, and so they can get a rate in the low mid threes, depending. So.
And sorry, back to one of the other things you said a moment ago. You talked about neighborhoods or segmenting the market. How is the market segmented here in this area?
Well, first of all, there's a difference between condos and homes, but also, and almost more significantly, each geographic area of our community is a little bit different, where Deer Valley is a certain market, and even Lower Deer Valley and Upper Deer Valley vary. But Park Meadows is a different market from Old Town. So we have different demands and different desires, shall we say, from buyers in those markets. Go ahead.
Add to that, we've got the primary resident, and we've got the secondary or the investment buyer.
Sure.
So we have everything from soup to nuts. So when somebody comes to me and says, I can't afford anything in Park City, geez, I was showing property yesterday on the $200,000 price point. So yes, there's inventory here. Don't let it shy you away.
So where can folks find out more about the home buying process, more about you guys, and how to contact you? Where can they go for that?
Go ahead, Rob.
They can call us. You can go to our website, lehartley.com. Of course, all of our contact information is there as well, but we'd love to hear from anybody and help educate people on the market and
Great.
help along in the process.
We've got a lot of years here between the three of us, so we've been here a long time.
And have you had a Warren Buffett sighting in town yet? To come out to
Sort
personally
of.
inspect the
At
office?
the parade.
Terrific. Well, this is the Lee Hartley Lifestyle Real Estate Team. Thank you guys very much for joining us.
Thanks, Ryan.
And we'll be back after these messages with more Mountain Morning Show.